And once again, good morning. As people join, we welcome them. Thank you for being able to attend this morning's conversation. My name is Andrew Hone. I'm the president and CEO of the Portland Business Alliance, Greater Portland's Chamber of Commerce. And again, thank you all for joining us today for our January video forum. I also think it would be notable to remark on the fact that just a short moment ago that we swore in our 46th president and vice president, and a historic vice president as the first woman of color in our nation's history to serve in that role. So we welcome President Biden and Vice President Harris in a peaceful transition of power. Everyone here at the Alliance hopes that you and your colleagues and your family are doing well. As you know, we continue to navigate through this pandemic, and we want to make sure that all of our members and community that we are here for Portland, so that once we make it through this, Portland will be here for us. Please shop, eat, and drink local. Use the hashtag #HereForPortland and visit hereforportland.com for more information. We will also continue to work diligently in being a resource to our community. Our website is updated frequently, and we encourage all of you to follow us on social media for updates. You can find us on Twitter, Instagram, and elsewhere. The recording of this presentation and all other forums and links for resources mentioned will be available on our website later today. Of course, none of these events could happen without the support of our members. And we have some incredible sponsors. I'd like to thank them today. KeyBank and the Portland Tribune. I would like to recognize one of our key sponsors, KeyBank, operating 74 branches in Oregon and Southwest Washington and helping our communities thrive. Joining us today from KeyBank is our great director on the Portland Business Alliance board, Michelle Weisenbach. Welcome, Michelle.
Good morning, everyone. Michelle Weisenbach, the president at KeyBank here in Oregon and Southwest Washington. And I just want to say a happy new year and happy inauguration day to all of you. You know, and on this day that we swear in a new president, I am reminded more than ever about the power of our vote. And before we vote, really making sure that we understand how we're going to arrive at the decision of that which we want to vote on. This year, we have, in very dramatic fashion, really heard about and seen the passion that people in this country have around the issues that are facing our country and our state and our local communities. And I think as we think about, you know, how we move forward and how we decision the things that are so important to all of us, really think about how do we get the information that we need to understand the issues at hand. You know, and this morning we're talking about one that's very important to all of us. It is, you know, about taxes and how we pay for the services that we need and that we want, and how do we really understand the impacts of those decisions that we're making. Really want to thank the Portland Business Alliance for just the work they do around the advocacy for the business community on important issues like this one, and really helping to bring forward that knowledge and information that we need to understand, you know, how do we pay for the things and the services that we so desire. But I also want to thank PBA for doing great work like this, where they convene experts like we're going to hear from today and help us really get some information so that we can have that, be better informed, have that perspective and context around the things that we're wanting to and understand and to decision. KeyBank's really proud to support programs like this one, like that PBA is putting on today. We encourage all of our team members to engage, and when they engage, to bring to the table their knowledge, their understanding, their compassion, and when they need to make a decision and to share in voting to move solutions forward. So thank you, Andrew and team, for the work that you've done to put this together, and I'm really proud that KeyBank was able to sponsor this today. Thank you.
Thank you, Michelle, and thank you for reminding us about the importance of democracy. And on a day like this, to see it in full display is one of those things we can all appreciate. So thank you again to KeyBank for your continued support. And also thank you to our sponsor, the Portland Tribune. Joining us today from the Tribune is Mark Garber. Thank you so much, as well as thank you for all the work of your editorial staff for keeping us informed of the news of the day. and just doing an outstanding job in this unbelievable times that we live in. So thank you, Mark, and to your entire team.
Thank you, Andrew. I appreciate that. And I'd also like to wish everyone a belated Happy New Year and offer my wishes that everyone stays safe during the ongoing pandemic and that we're all continuing to be careful while we wait very patiently for the vaccine to roll out. As Michelle mentioned, I've also been watching the historic events in Washington this morning and the celebration of our country's democracy. So yes, it seems very appropriate that we have a chance to talk today about how democracy is working locally right here in Portland. You know, you can tell a lot about a community by what programs and services it chooses to tax itself to support. And, you know, you can also learn a lot from how effectively those tax dollars are used. And that's why at the Pamphlet Media Group, we expend a great deal of resources on our 25 news websites and print editions to cover local government and in particular tax issues and tax measures. You know, as individuals and businesses, all of us see the societal and economic benefits of taxes, and we also share the burden of paying those tax bills. So I'm looking forward to the discussion today. It promises to be very educational. I also want to say thanks to the PBA for keeping us all informed as many of us continue to work remotely and stay socially distanced. These forums have been a very important tool to keep us all together. So thank you, Andrew and the PBA, and the whole PBA crew for all of your work on these.
Thank you, Mark. Thank you to the Tribune. And before I just introduce our board chair for the Alliance, I want to just acknowledge this incredible panel and moderator. You know, taxation and understanding the impacts of taxes is something that's very important and key to our members and a thriving and competitive region that we live in. And we really depend on them for their expertise as resources and partners in those conversations. And not only are they great content experts, but they're also just fun to work with. So I just want to point that out to everybody. So thank you to our panelists and moderator. And with that, I want to introduce the board chair for the Portland Business Alliance, Mike Olive, president of business with the Portland Timbers and Thorns. Mike, it's great to see you and welcome.
Thank you, Andrew, and welcome everybody to our January forum, Leveling Up, How New Taxes Impact Our Community's Bottom Line. Thank you all for taking time out of your day to, on this momentous day, to be here with us. We have a great group of panelists who you'll meet shortly, who will have terrific insights on this very important issue. We know you have questions, so please use the Q&A tool that you'll see at the bottom of your Zoom window. That's the only way your questions can be asked, but we encourage you to do so. When you do submit questions, please include your name, your organization, and the location of your business. And please feel free to use the chat function for any real-time comments or observations that you have. And now it is my pleasure to welcome our moderator for this morning's event, Kathleen Key, who's the Senior Wealth Advisor at Buckingham Strategic Wealth. Kathleen.
Thank you, Mike. Good morning, everyone, and thank you for joining us today for a discussion about taxes and how they impact our businesses. Today, we have an excellent panel, and they all work in different areas around taxation, and we're going to have introductions in just a moment, but let me introduce them to you. Our first is Jeff Newgard. He's principal at Peak Policy, LLC. Nikki Dubé, a partner at Evershed Sutherland, and Daniel Lepore, who's a partner at Moss Adams. We have really good information for you this morning, and let's start with introductions. Nikki, why don't you go ahead?
Thanks, Kathleen. Happy to be here. Happy New Year, everybody. Happy Inauguration Day. My name is Nikki Dubé. I am a state and local tax partner at Evershed Sutherland. If you head over to the website, you will see that I am out of the Sacramento office, but I do spend the majority of my time in Portland. I've been in Portland for many years now and have worked at various firms, accounting and law firms in the Portland area. Prior to joining Eversheds, I was senior tax counsel with the Council on State Taxation, and spent about 5 years focusing almost exclusively on legislative advocacy work in the 13 westernmost states and speaking on state and local tax issues. So Portland has been a hotbed of tax things. I'll just call them things at this point, and we'll be discussing several of them. So really looking forward to the conversation with Jeff and Dan today. We guarantee it will be informative and fun.
Thank you. Go ahead, Jeff.
Good morning, everyone, and thank you to the Portland Business Alliance for putting this event on today. My name is Jeff Newgard, and I'm a state and local tax lobbyist and policy strategist based out of Washington County. My roots are in politics after spending time as a staffer, campaigner, and a lobbyist, but my passion is tax policy, controversy, and simplification.
Thank you. And Dan?
Good morning, everyone. My name's Dan Lepore. I'm a state and local tax partner at the accounting firm Moss Adams in Portland. And I assist clients with state and local tax planning and consulting, as well as tax return compliance. And Moss Adams has been advising clients on planning strategies and how to comply with the new Oregon and Portland area taxes that we're going to be discussing today.
Thank you very much. So we're going to set the stage and give you the lay of the land for the taxes that are up this year, and Jeff's going to do that for us.
So anyone familiar with the Portland and Portland culture knows the moniker "Keep Portland Weird." Unfortunately, and especially even more lately, that slogan really seems to extend to our tax system. Here in the Portland area, a single business is subject to at least 7 different taxes between federal, state, regional, county, and city governments. And if the firm has sales exceeding certain thresholds, they may have multiple gross receipts tax layered on top. Just in the last year, we've seen an increase in the Multnomah County and City of Portland business taxes. We've seen the creation of new business and personal income taxes at Metro, new personal income tax at Multnomah County. And that's not even to mention some of the proposals that we've seen over the last year, payroll taxes, carbon taxes, and that's all on top of the continued implementation of the new statewide corporate activity tax. I would say that in one word, the tax landscape here is challenging. But it's also not just about the ultimate liability. I keep hearing more and more from businesses and business owners that the cost of complying with taxes in the local and regional area is really starting to outweigh the actual tax costs that are paid to government. I think that that's perhaps the most challenging and perplexing issue that really faces our local tax system. And it emphasizes the need for our local leaders to prioritize efforts to find ways to make our tax system more efficient, to be able to make compliance easier, and also for local governments, make tax administration easier too.
Thank you for that. There's 2 particular taxes that we want to highlight today. And Nikki, why don't you go ahead with the Metro tax?
Sure, thanks, Kathleen. And I think Jeff did a great job of really setting the stage and discussing kind of where we are at in Portland and the challenges that businesses are facing. So in May of this year, we saw metro area voters approve 2 taxes, both income taxes, one personal and one on the business side. On the personal side, I think this is not out of line to say the messaging to voters was that this was a high earner income tax. It's a 1% income tax on single filers with more than $125,000 in taxable income. And then for joint filers, that threshold goes up to $200,000. The tax is imposed on residents. Residents will pay the tax on 100% of their worldwide income. And for non-residents, they will pay the tax on their metro source income. which generally under our state rules refers to income that is earned while physically present in the jurisdiction. So that's how the tax works on the personal side. On the business side, also a 1% tax. As approved by voters, it was, I think, a sentence or two, which just said that a business profits tax of 1% would be imposed. This tax is based on net income. So it is a net income tax, not any sort of gross receipts tax. And in December, we saw Metro adopt their final ordinances, which track very closely the city and county's tax business on the business tax side, their ordinances. And so we saw Metro adopt for the business tax, cost of performance sourcing for purposes of for multi-state taxpayers to determine their Metro source income. And then we also saw an entity level tax go into effect with a credit provided on the personal income tax side. These are two interesting policy choices. We'll be discussing the issues that Metro faces in more detail throughout this discussion. But Metro is really in a different situation than the city and the county when it comes to the authority they have to impose taxes. So a little bit of a teaser, they don't have, or spoiler alert, they don't have the same level of authority in our view that the city and county have. So we see some definite issues with the ordinances that have been adopted. And there is actually litigation that has been filed and which the Portland Business Alliance will be involved with. And we'll talk about that in a lot more detail later with respect to their authority. But I think I'll turn it over to Dan to discuss the Multnomah County taxes that were also brought in this year or last year.
Yeah, thank you, Nikki. So in addition to the Metro tax, which Nikki just talked about, in November of 2020, Multnomah County voters approved a different ballot measure, 26214, to fund preschool services in the county. And this measure levies a 1.5% income tax on individuals only with more than $125,000 of taxable income or greater than $200,000 for joint filers. And then the tax rate increases to 2.3% in 2026. There's an additional 1.5% tax, so 3% total, imposed on individuals with more than $250,000 of taxable income or greater than $400,000 for joint filers. And this tax is imposed on residents of Multnomah County, as well as non-residents with taxable income derived from Multnomah County sources. And this tax is effective beginning this year, January 1st, 2021. And it's not clear at this point, there isn't specific guidance on what the sourcing rules will be for non-residents. But if the rules are similar or mirror the sourcing rules applicable to Oregon non-residents, then I think that we could expect that income earned for services performed in Multnomah County may be subject to tax. And then for non-resident owners of pass-through entities, they will need to consider income of the business sourced or apportioned to Multnomah County.
Thank you, Dan. We have a question, Nikki. Do you want to explain what the Metro tax is for? The purpose?
Sure. I'm always a little lacking on the revenue side of these things. I get really focused on the tax stuff. So so what Metro voters passed back in May was to fund homelessness services. So that is the purpose of the funding for both of these taxes, is that revenue would be earmarked for those types of services. And I don't know, maybe Jeff or Dan knows if there's anything specific on what types of services will be provided.
Nikki, my understanding is that they're looking at doing what are called wraparound services for the homeless population. In 2018, I believe, Metro had referred and voters approved a substantial housing bond to go and build housing. That was in addition to the city of Portland's housing bond, with those two combined really looking at kind of the brick and mortar solution or opportunity to be able to go in and improve the access to housing for the homeless population and just the lack of affordable housing generally. My understanding with this homeless services tax or taxes, this is the wraparound services. How can you be able to go and support, the homeless population, get them into, this new housing, all this new housing, and to be able to go and kind of lift people out of homelessness, throughout the course of, the programs from these taxes.
Very good. And does the Metro business tax only apply to income over 5 million?
That is correct. Yes. So gross receipts over 5 million is I believe the trigger that puts you into the tax.
So you can see by the way the panelists have identified the different taxes and the different breakpoints and calculations that the compliance is really a big, complicated issue for individuals as well as businesses. But panelists, tell us, what's the biggest impact in our state and region business community? Which is it one in particular tax? Is it just the, what's the issue around that?
I'll get us kicked off. I think this will be a good discussion. So Jeff and Dan, feel free to interrupt me as you see fit. I think the biggest issue is what Jeff mentioned earlier, is that it's really the layering on of the multiple levels of tax. So again, we've got federal, we've got state. Most taxpayers are now going to be paying the CAT, and if you're a corporation, you're going to also be paying a corporate income tax at the state level. And now we've got, in addition to our traditional city and county business income taxes, you have both the Metro or the Metro business tax as well. And then, there are other taxes that have come into effect over the past 3 or 4 years, the CEO to average wage ratio tax, the Portland gross receipts tax, and it becomes just an overwhelming compliance burden. And one of the issues, and I will definitely let Dan speak to the compliance burden, but before I turn to him, I would just say one of the things that Jeff and I have worked closely on, Jeff in particular with Metro, is making the rules consistent with state law. And in our opinion, we believe Metro is required to do that. There is a state statute that requires Metro to administer any income tax consistent with state law. Metro does not believe that they're required to comply with that law. However, that is our position. So then the question becomes, well, if you make Metro consistent, isn't that challenging if the city and county aren't consistent? And yes, that is challenging. And so, but my response to that would be, well, then the city and county should also be consistent with state law, because that will ease the overall administrative burden.
Dan, do you want to make some comments?
And Nikki, I know that Ernst & Young, I believe, did a study, but the top marginal tax rate now for individuals in Multnomah County is, my understanding, is going to be upwards of 14.6%. Is that right, by 2022?
I think it's 13.9, and then when you add on the TriMet, the TriMet payroll tax, that gets you up to the 14.6. So yeah, depending on how you look at the payroll tax, you're right around 14.5%.
Yeah. So for individuals, that's clearly a really high tax rate. And speaking to the compliance burdens, in addition to the new tax return filings that are going to be required, there's also going to be a payroll withholding requirement for employers that have employees subject to both the Metro tax and the Multnomah County preschool tax. So, in addition to the filings, now employers are going to have to deal with this withholding requirement that's going to add to that burden and cost. So a couple things that, I've been hearing from businesses and individuals, involve considerations around relocating business activities outside of the Portland metro area, and individuals that are looking into changing residency. And so, this analysis does involve a careful review of the rules for domicile and residency, based on the facts and circumstances. But it is something that people are considering because of the layering of these taxes that are resulting in a really high effective tax rates.
And I would add, Dan, with respect to the withholding, as I've been reviewing some of the the ordinances that have come out from Metro and the Q&As that have come out, businesses are able to, for 2021, withholding is optional. However, you have to give your employees the option to opt in. And then starting in 2022, withholding is mandatory once your employees hit the $200,000 income threshold. But employees can opt out. And I feel like these opt-ins and opt-outs are going to also create a significant burden on businesses. And in particular, if an employee does opt out, the business is required to provide that information, the taxpayers' information, to the city so that they can essentially go after that employee on their own. So I think these aren't really things we see states requiring in the withholding area. Generally, a state just requires withholding if certain things are, if the employee is working there. And so I think these opt-ins and opt-outs are going to be a little bit of a gotcha issue later on. Jeff, I know you have comments. You can't be silent this long.
I always have comments.
That's right.
Kathleen, I think that this is a little bit of a trick question because I think, and I'm kind of hearing a consensus here that what is the kind of the tax with the biggest impact? I think it's all of them. And I think in politics, we often think of taxes and tax policy in a vacuum because, certainly in the state legislature and conversations with elected officials, when we talk about taxes, we're generally talking about a single tax, in the context of whatever the current debate is on. But we have a tax ecosystem. And this is an ecosystem that impacts, the state just as much as businesses, government revenues and business revenues. But like Nikki and Dan, if I had to pick one, I would say the metro income taxes. And it's not because it's the highest or the most expansive tax, but I think that it might be one of the most consequential taxes that we've seen recently. And from my vantage point, and I hope this doesn't upset anybody, but I really do think that we're seeing the expansion of Portland's fragmented tax system really span outside of city and county limits. And I think that only increases the need to be able to have the consistency and simplicity of aligning with the state, as we've talked about.
And the last thing I'd add is, and Dan brought this point up earlier about individuals thinking of relocating or changing their residency and domicile. And this is also, I think, a question businesses are going to start asking as well. When I was at Cost, I spent a lot of time at the state level in various states, Oregon, Washington, California, talking with state legislators about the impact of their tax decisions on businesses and where they locate. California has seen a huge number of businesses leave the Bay Area and move to Texas. Everybody understands why. Texas doesn't have an income tax. Taxes are very high, and the regulatory environment is very challenging in California. What Portland and the county and Metro are doing is that on a local level. And I think that's particularly troublesome when we live, when our city borders another state, where for an individual to move, their marginal tax rate may have just gone from 14% to 0. Now, yes, there's a sales tax in Washington, and Oregonians are adamantly opposed to paying sales tax. So maybe that will keep them from moving across the river. But these are real these are real numbers at this point for both individuals and businesses. And policymakers often say, businesses won't move, businesses won't move. I think if you look at the EY cost study that OBI put out, we're at a tipping point in Oregon and very much in the Portland area.
Very good. And Dan, you were talking about businesses if they move to a different count outside Multnomah County, does that help them escape the taxation?
It depends. I think that for individuals changing residency, definitely could reduce your tax burden. And especially right now, since there's a lot of people that are working remotely, the workforce is really mobile. It's much easier for people to relocate outside the city or county or metro area, and work from a location outside the city and county. So I think that for individuals especially, there really could be a benefit to relocating. I think for businesses, it gets a little more complicated because of the way income is apportioned or sourced. So if you are a business and you still have customers located in the metro area or the county, you're still going to potentially be subject to these, or specifically to the new metro tax. And so I think that with businesses, it gets a little more complicated and requires additional analysis for sure.
Very good.
And I would agree wholeheartedly with what Dan said. The one thing I would add is I did notice when I was looking at some of the FAQs on withholding, businesses outside the jurisdiction are not required to withhold. So there could be a compliance aspect to moving outside the county as well. That was something that I just ran across earlier this week. So.
Well, Nikki, and another thing that businesses really need to keep in mind, especially with this metro income tax and the preponderance of work from home over the past year, is you really need to know where your employees are located too. And that might seem like it's standard, but we've seen over the past year a lot of employees have decided, hey, this is a great year for me to go and get into a Volkswagen minivan with a Wi-Fi hotspot and go and work wherever I am. And employers really need to figure out the best tracking systems for them to be able to comply with these taxes, and especially the withholding requirements.
Yeah, Jeff, that's a good point. And there was that concern last year about employees working in Vancouver or in Washington. And so, that's always kind of been an analysis employers have done at a state level. And now with these new local taxes and the metro income tax, it adds just that extra layer of complexity and having to not only track where the state where your employees are located, but now also the local jurisdictions where your employees are located.
But Dan, I'm sure you consult with numerous clients daily and tell them about the nifty, technology they can use to do this. It's like flipping a switch. Isn't that what we heard? These taxes, compliance is so easy. So. Yeah.
If you're aware of any software that does that, please let me know.
So let's throw out another question for the panelists. Can you guys comment on the trickling down effect that the taxes will have on our supply chain and impacting smaller businesses and the consumers?
I'll go and start with that one. I think the answer to this one has to be yes. In the end, all taxes are ultimately paid by consumers, and that includes business consumers too. It's a conversation that I think we've had more and more in Oregon, especially after the corporate activity tax. And there are others out there that will go and comment that shareholders pay taxes, employees pay taxes. From my vantage point, I think at the end of the day, it really does fall on the supply chain and the consumer.
Yeah, and I would echo that. I think if it doesn't fall on the consumer, then it's going to fall on the employees through lower wages and things like that. But yes, Again, during my tenure at Cost, I spent a lot of time talking about the three options businesses have when taxes are increased. And yes, it can come out of the shareholders' rate of return. That's usually not where it comes out of. Or it can come out of wages, or it will result in higher prices. And so I do expect that with the addition of all the new taxes in Oregon at the state and local level, we will definitely experience higher prices in probably different ways over different industries.
Yeah, and I would add to that, specifically with the corporate activity tax, even figuring out what the effective tax rate is to the end user and customer isn't clear, because the CAT specifically applies to every level of the supply chain. So in some industries like, construction, for example, I've heard some construction contractors say that by the time you calculate the taxes throughout the supply chain, by the time it gets to the project owner, the effective tax rate of the CAT might be closer to like 4 or 5% or even higher. It makes it really, really hard to kind of estimate what the impact is of certain taxes.
I think
Dan, that you mentioned that construction could be impacted quite a lot. Are there other industries that you guys feel that will be impacted significantly?
Dan, you want to start this one off?
Well, I was thinking maybe, Nikki, since I know you're working with the the sourcing rules around services and intangibles with the Metro tax. I think that service providers or sellers of intangible or with intangible revenue streams are going to be particularly affected potentially by the sourcing and apportionment rules within Metro. I don't know if you want to talk about that a little bit and what the work you've done.
Sure. Happy to. Yeah, I wasn't sure, Kathleen, if we were focused solely on the local taxes or more broadly, but yeah, for the Metro business profits tax, and then we also have this issue with the city and county business, the taxes on the business side, the income taxes. Again, as we mentioned earlier, the city and county have never conformed to the changes that Oregon put into effect in 2018. And what happened in 2018 was Oregon went from what is known as cost of performance sourcing, which was the traditional way in which the states sourced income from services and intangibles. And really under that regime, you look to where the services are performed, or if it's an intangible, a receipt from an intangible revenue, you look to where the intangible is being used. So if you've got a royalty income, that royalty gets sourced to where the intangible property sits. And services as well. So if you're a law firm performing services in Oregon, that income would be sourced there for Oregon purposes. In 2018, the state switched to market-based sourcing. And under market-based sourcing, the shift now is to where the customer receives the service or where the intangible property is used. So really does flip this cost of performance system on its head. So as opposed to looking at, I'll pick on Dan as an accountant, as opposed to looking to where Dan is sitting when he's working on a tax return, now you look at where Dan's client is. So if he was preparing that tax return for a Washington client, that receipt would be sourced to Washington. Why would we make this change? Well, cost of performance tends to favor the out-of-state companies and tends to impose a heavier tax burden on in-state companies. I teach state and local tax. This is my favorite part of the class when people would say, who would ever design a system like that? That's so stupid. Well, it was designed back in the 50s when the our economy was largely manufacturing, and it was service providers weren't flying all over the country or working on Zoom. So they were very localized and it made sense. Fast forward 50, 60 years, most states have moved to this market-based sourcing. And so that is really where the city and county and now Metro are out of alignment with the state. And it really does add to the compliance burden, and it really does add to the burden on the local taxpayers, local businesses that perform services. So the accounting, law firms, architectural firms within the metro and city and county are required to include a much greater portion of their income under these cost of performance rules. And the out-of-state taxpayers that are performing those services outside of the jurisdiction ultimately may have no receipts that are sourced to the localities.
Well, and Nikki, one thing that I think is crucial, especially putting a political lens on this, is that at the end of the day, Oregon is a small state. We're a small market in the grand scheme of the United States as one of the world's largest economies. We have more businesses outside of Oregon that are selling products into Oregon, and especially in this realm of services, Metro, Multnomah County, and the city, I think they're all missing, an opportunity to be able to expand their tax base without going and increasing the tax burden on local employers by going and making this change to, what many people will see as a complicated tax provision. But and this is the world that we live in. Sourcing, apportionment, all of these issues really are crucial parts of the tax system. But by going and making this change where the out of district or out of county or out of city taxpayers, if they have sales within the jurisdiction, have to go and at least pay some part of a tax and go and change it so the accounting firms, the law firms, or whatever service firms are going and actually producing activity and employing people, which should be a priority for our local governments and our elected leaders, to go and kind of equalize the playing field, level out the playing field of the tax system between these two different groups of businesses. You can expand the base. I'm willing to bet that you raise more money. We saw that in I believe it was the November revenue forecast in the Oregon State Legislature. The state economist was talking about how some of these tax changes that the state's made over the last 15 years have actually greatly expanded the state's tax base, because you have taxpayers from outside of the state that previously weren't subject to tax in Oregon now subject to paying tax. And and what they're finding out is that it's not all that difficult to be able to go and find those taxpayers, because other states are making the same changes. And businesses, especially larger multi-state businesses, are growing accustomed to these compliance requirements, that it's so long as states, and in our case, and for this conversation, the local governments are following a similar set of rules that are used elsewhere, used at the state level, compliance becomes fairly simple. It's an opportunity for local governments to be able to go and broaden their base, raise more money, and also make their local business community happy. And I learned recently that this is actually an initiative that the Portland Business Alliance is taking on, and I'm pleased to see that this is something that our regional chamber is prioritizing, because it really is one of the few examples of a win-win between local governments and the business community. And I fundamentally believe it's achievable this year.
And Dan, I'm going to ask you, when you're working on compliance for your clients, if I'm going back to my compliance days, I mean, Portland's, which now Metro and the county use, their sourcing rules aren't just your general cost of performance rules. So you're really required to use these rules that the city has developed, which get used really nowhere else in the country. Is that?
Yeah, I think you're right. Yeah, there are very unique rules for services, but then also for revenue from other intangible revenue streams and sale of a business. For example, Multnomah County has very unique rules when you sell a business and you recognize gain on the sale of goodwill, for example. Portland's rules and sourcing rules for that gain are very different than the state and any other jurisdiction that I'm aware of. And the examples that they give in their guidance is not very clear, and it lends itself to a lot of various interpretations, and so I think more conformity to what the state is doing would make a lot of sense. And really, like you said, Nikki, and what Jeff said too, that the current rules, I think, really do burden metro-based businesses more than businesses based outside of the Portland metro area. And so shifting to more of a market sourcing methodology similar to the state, makes a lot of sense.
And on that, all of you work with maybe out-of-state businesses. And do you care to share any comments on what some of the comments might be for those that kind of think about coming to Oregon and the metro area and specifically?
Well, at cost, I represented about 550 large multi-jurisdictional companies. And unfortunately, we talked about Oregon way more than I think everybody wanted to. And we weren't talking about the great beer, cocktails, or coffee. So Oregon generally doesn't have the best reputation around the country with taxpayers. And Portland hasn't, with the proliferation of all these different taxes, they haven't helped that reputation. So with respect to this shift from cost of performance to market at the local level, however, as Jeff mentioned, Dan reiterated, it will take some of the burden off of the local companies, and that will get shifted with the switch to cost of performance, or market from cost of performance does create winners and losers. This is a policy issue that is well known. However, I think there are many taxpayers that would welcome the consistency with the state rules and the compliance burden being, for having to pay Dan or somebody else to do that weird Portland funky calculation. I don't think you're going to have too many folks complaining about that. The shift to market, the sea change has happened. That is kind of the way that the states are going. Taxpayers, I suspect, are probably more caught off guard when they've got some weird rules like Portland is trying to impose. And I'm sure Dan would maybe like to have some time back, that he's not having to dig into some of these strange Portland issues quite so much. So I think even though there may be a greater tax burden, to Jeff's point, kind of way back at the beginning of this, taxpayers just want to know how much tax to pay. They want to pay the right amount. They want to pay what they're supposed to. They don't want to pay more. They don't want to pay less. But if you give them clear rules that they can comply with, that is their goal.
Very good. Thanks, Nikki. So I'm going to ask each one of you if there was something that we could fix. Well, we've talked about, having everyone be following the same rules. That certainly would help. But how do we fix this? How do the individual business owner and the smaller businesses and the individuals? How do we fix this? Jeff, I'm going to start with you first.
Yeah, I think that, at least from my response to this, I think that we largely covered it in the last question, but it really comes down to consistency and the simplification. Our regional tax system is overly complex. It's burdensome for businesses to navigate. The easier that you can make that, you can be a high tax state and still be taxpayer friendly. It seems like an oxymoron, but if you can at least make the compliance and the simplification easy, make it achievable, it's not going to end the conversations on Portland and Oregon being high tax jurisdictions, but it makes it manageable. And I think the issue that we're running into right now is that our tax system is growing less and less manageable. And to the question of out-of-state businesses, and especially out-of-state businesses looking to go and site satellite offices or new headquarters, or just going and setting up shop in the Portland area, they go and they look at our tax system and the politics around our tax system, and there's just this cloud of instability that hangs over it. And if I'm a business owner looking to go and set up that satellite office, why do I want to go and set up in a place where I don't know next year what the big conversation is going to be, or if there's going to be multiple big conversations? Look at the number of taxes and tax battles that we found ourselves in last year. That instability is scary to a business owner. We're in a difficult economy right now. It's going to come back soon, but we really need to be thinking strategically and in a coordinated way of how can the local government send a message to the business community, the local business community, and just the broader business community. If Portland is open for business, we want your business, and we want to be able to go and kind of have stability. And I think we can achieve that, at least start a conversation on that with improving the management of our tax system.
Thank you, Jeff. Dan?
Yeah, I agree with Jeff. And, I think most economists, are skeptical of local or municipal income taxes because of, how we discussed earlier, there's opportunities to move or leave a local jurisdiction. And it's much easier to do that at a local level than at a state level. Also with the, compliance burdens that we discussed, and the costs for taxpayers can be significant. So, I think a better option is for reform of income taxes at the state level, with then, distribution of revenues back out to local municipalities where that revenue was collected from. I think ultimately that's better. And then when you do that, then your treatment of income items and the laws you'd be following are consistent with the state laws and rules around apportionment and all of those issues. So yeah, I really do think reform at the state level is the right thing to do.
Very good. And Nikki?
I think Jeff and Dan are spot on. And, I would add to that, one thing that makes this conversation in Oregon and then the localities so challenging is the lack of a statewide sales tax. Jeff and I wrote an article with this as a major theme earlier last year now. And most states are able to turn on a funding mechanism at the local level just by allowing states to add on to the statewide sales tax. And as we know, sales taxes are very stable sources of income. Again, they've got their issues, as do all taxes, but that is a way that most states can use the state system, which is administered at the state level, as Dan said, but then distribute some significant funding to the local jurisdictions. And we simply don't have that structure here, and it makes it very challenging. So I would love to see reform discussions at the state level on local taxes, but I probably will put myself in Jeff's camp on this and be a little bit more of a realist and say, I think the alternative has to be some real conversations at the local level as to how to rein in all of the ideas we have so far and really create a system that's just more manageable. And I think a first step there is creating this consistency at the local level where that can be created with the state rules at least. And so I think those conversations are happening again, as I mentioned way back at the beginning of this conversation. Litigation has begun with respect to the Metro tax and whether or not they are required to comply with the state law. And so that is something that the court will be addressing. Portland Business Alliance is very involved. So I would encourage you to reach out to Andrew or John, Isaac, if you have any more questions on that. But again, very happy to be working with PBA on that issue, and hopefully we'll get a resolution sometime this year.
Wonderful. Thank you, all of you, for your wonderful insight. I want to invite Andrew Hone back to help us with some questions and answers that we have that have been submitted. But Andrew, can you make a couple of comments on what the Business Alliance is doing in regards to this last question about how we fix this?
Sure. Well, I would say this, a couple things. We're coming up to time here. Unfortunately, though, I do know that we could sort of continue this perennial conversation, and I know we actually have a lot of questions that are that are in the queue. And I want to make sure that everybody understands that if you submitted a question, we are going to respond to it or have one of our panelists respond to it, but it may just have to be after the fact here. And I just, a couple of things stuck out. I want to queue it up in your response to your question, Kathleen, that you imposed a question that I thought was really thoughtful, is what does this mean to me, right? That question. And what we're talking about here across the board is the incidence of tax to businesses and what does that mean for our economy. But there is a burden that is assumed by every consumer and individual and resident within our region. And we really have to approach taxation from that perspective, because I think something gets lost in translation sometimes. And so we're dialing up a little bit of an analysis on that we'll tease out at the February forum, building on the great work that was conducted with OBI on the statewide implications of tax increases, both here in Multnomah, the region, as well as the state. So I just want to highlight that that's coming down the road in our State of the Economy report, which will be up in February's forum this time next month. So please stay tuned for that. And then also, I think to us, there's this really fascinating piece here where aligning tax policy is not exactly the front of mind for many policymakers. And that's not a critique. It's just a reality that when you go about your daily business as an elected official, what you spearhead is not necessarily the thing that alignment on tax policy isn't exactly something that has a very easy or maybe tangible connection for most policymakers. But what we found, and really through the great work of all the panelists here especially, is that there are those win-wins that were talked about today. And I think that's the thing that is the hook for us, and that we need to work collectively with our partners in government to make sure that this additional resources that could come to bear while being able to capture out-of-state activity here in Oregon and the region, that's a great benefit for all the services that we absolutely depend on. So I think what people do need to be aware of is the work of aligning the taxes both in Portland, the county, and across the region with state code is high on our list. And there is a single point of effort, which is at the Portland Revenue Bureau, which administers many of these taxes. So in some ways, while these taxes are levels of government, the work and the conversations can really occur directly with one bureau, and that's managed by the mayor of the city of Portland. So we actually have a good opportunity to make some very big changes, big wins for our region, big wins for our business community, and to capture additional resources to help fund the services we all depend on. So that's my broad picture commentary. And again, apologies to those that submitted testimony, but I think you can see this is clearly something that folks are interested in, and we'll make sure to follow up with everybody. So with that, Kathleen, if you want to just make a last minute comment yourself before we make some wrap up remarks. And again, thank you to you, Kathleen, and to our entire group of panelists who are just incredible resources to all of us in the business community. I want to thank all of you for your work. So with that, Kathleen, any last comments?
I don't really have any comments. I think it's all been really well summarized. And, you know, we've come to a point where we know what the charge is. And so we all just need to figure out how we plug in and help move change forward.
Absolutely appreciate it. And stay tuned to portlandalliance.com. Great place to catch up on all those resources. And to all of you, we wish you a happy new year and maybe even a boring new year. Let's hope for quieter times in our future, and stay healthy and be well, everybody. Thanks so much for the attendance.